This is the Coins, Cashflow, and Competition podcast. I am your host, Dakota Grady, sponsored by Upstate Essential Solutions. Welcome to the podcast, y'all. Thank you for joining me. Today, I'm going to dive right into the conversation. I want to give you 5 tax strategies that you can use in your business year-round, not just tax season. Let's dive right into the conversation. So, the first tax strategy that you can use and you may be overlooking is bookkeeping. Why bookkeeping? Well, people underestimate the power of bookkeeping because without bookkeeping, you don't know if you're making money or not. You don't know if you're spending too much money in a certain area. 2, you can't value your business, meaning if someone wants to buy your business, how can they value it without bookkeeping? And 3, the third one is paying your taxes, y'all. Filing taxes for that matter. So you can't file taxes without bookkeeping. And honestly, bookkeeping is one way to reduce your taxable income. That's why it's a tax strategy, because you don't want to just pay taxes on 100% of income. You want to reduce your taxable income with expenses. So without bookkeeping, you'll pay the highest tax amount on the income you earn from your business. So make sure you hire a professional to do bookkeeping for you. Don't go it alone. I know people tell you it's easy, that you can do it yourself. I recommend hiring a professional to help you with bookkeeping. Go to dakotagrady.com to find out if you can get help with your taxes and bookkeeping for your business. The second way to save money in your business with a tax strategy is by hiring employees. In my experience of doing bookkeeping and taxes since 2012, so over 10 years of experience, one of the biggest expenses a business can have on the accounting records is payroll expense, employees. You get a win-win because 1, you're making money because you're using other people's labor, and 2, you get to deduct that labor as in the business expense. So by you having employees, your income skyrockets because you're using other people's time and their skills to make more money for you, and you can also get a write-off. The third one is similar to the second one. However, if you have an S corporation, you're the owner, you can become an employee of the business and get a business expense. How? Well, the IRS requires you to become an employee of the business and pay yourself a reasonable compensation for the business. Because if you don't, you take money out without paying taxes on it. The IRS doesn't want you to do that. They want you to pay taxes on what you earn. So by becoming an employee, you pay federal taxes, Social Security, Medicare taxes on your income, which everybody should, because you're making money, you pay taxes. It's part of the game of living and having a business. So to reduce your income, become an employee of the business, and then get the write-off by paying payroll expense. That's simple, y'all. And the next one is the accountable plan. The accountable plan is simply when an S Corp owner says, I'm going to create a written plan to reimburse myself for anything I pay on behalf of the business. For example, you are an owner of an S corporation, you're going to buy some pen and paper, some ink, and cartridges for the business. You will use your personal debit card or credit card to make the purchase, get a receipt, and then you'll submit that receipt and an expense report to your accounting department. They will approve that reimbursement. Once you reimburse yourself, that income or that reimbursement is not income to you, 1, and 2, the business can make a business expense for that reimbursement. However, if you don't have an accountable plan in place, the reimbursement will become income to you, so you have to report that income as wages on your W-2 because you are an employee. And the second thing is, the business won't be able to deduct that reimbursement as an expense. So this part is very important because I realize people don't really know about the accountable plan. When I was an auditor for one of my employers in South Carolina, I had to do all the same process. I would go travel to different client locations, pay for the travel, hotel, food, rent a car. I would pay for all that on my personal credit card. and then I would submit receipts and expense reports, and then the employer would reimburse me for my travel. You have to follow that same process if you are an employee of your business, whether it be a C Corp or S Corporation. Make sure you get an accounting plan in writing so you can follow it and make sure that you're getting the maximum tax deduction for anything you spend on behalf of the business. I'm giving y'all a game right here, right now. And the last one, you want to do quarterly estimates. Why? All right, so you withhold taxes in two ways. First, if you're an employee of the business, say you have an S corporation again, you're getting paid as an employee, and the employer, that is the business, will withhold taxes for you on your behalf. In fact, they will withhold 7.65% for you for Social Security and Medicare, and whatever amount you will be withheld for federal taxes too. They're submitted to the IRS and any state agencies as well, depending on what state you're in, for state taxes. The second way is to do quarterly estimates. So if you're a business owner, you will estimate how much you would withhold in taxes based on the income you earn. If you earn $1,000 or more, I recommend doing at least 25% for taxes. 25% comes from, you roughly said the IRS is gonna withhold, we're gonna pay 10% in federal taxes. And the 15.3% comes from Social Security and Medicare. As an employee of a business, you withhold part of FICA, 7.65%, and the employer withholds the same amount. So 7.65%, 7.65%, times 2 is 15.3%. So 10% federal taxes plus 15% equals 25% for taxes. That's why I recommend withholding 25% for taxes if you're doing quarterly estimates. If you earn $1,000 for the quarter, you do 1,000 times 0.25 and it gives you $250. Therefore, you withhold $250 for the quarter and submit it to the IRS. If you do that each quarter, at the end of the year when you file your taxes, the money you submit to the IRS for quarterly estimates, and as an employee, right, of your S Corp, you'll have money withheld for quarterly estimates, plus money withheld for you as an employee. So those amounts should offset the amount of tax liability you would owe when you file your taxes. So you would either withhold more than you owed and get a refund, or you would withhold less and you would more likely pay a penalty because you didn't withhold enough tax doing quarterly estimates and you would owe tax. So I hope these 5 tax strategies can help you. Let's do a recap. The first one is bookkeeping. Get someone to do bookkeeping for you because it's important for you to know the numbers in your business. Secondly, hire a team of people to work for you so that you can make more money and get a tax deduction as well. 3, become an employee of your S corporation to get a tax deduction. 4, have an accountable plan in place so that you can reimburse yourself for anything you pay on behalf of the business. And lastly, do quarterly estimates for your business. That way, you will withhold hopefully enough tax during the year and not owe tax at the end of the year. I hope this conversation was helpful to you. Please like, share, and subscribe to the Coins, Cashflow, and Conversation podcast, y'all. Thanks for joining us.